Negara, Malaysia is well known as the Central Bank of Malaysia. It is a statutory body which started operation on 26 January 1959. Besides, it is governed by the Central Bank of Malaysia Act 2009. Its headquarters is located in KL, the federal capital of Malaysia. First, the role of Bank Negara Malaysia is promote monetary and financial stability to providing a conducive environment for the sustainable growth of the Malaysian economy. Second, Bank Negara Malaysia also implementing initiatives to deepen and strengthen the financial markets, including the foreign exchange market. Lastly, it also acts as a banker and advisor to the government of Malaysia.
Next, let us discuss the monetary policy in BNM. Monetary policy is the process by which central bank controls the supply of money, often targeting an inflation rate or interest rate to ensure price stability and general trust in the currency. The purpose of monetary policy is to stabilize the economic growth, lower the unemployment rate, and maintain predictable exchange rates with other currencies. The government practices two monetary policies in our country, which are expansionary policy and contractionary policy. Expansionary policy increases the total supply of money in the economy more rapidly than usual to combat unemployment in a recession by lowering the interest rate. Contractionary policy slows the rate of growth in the money supply or even shrinks it to prevent inflation. Function of interest rate in monetary policy. Do you know that interest rate controls the money supply? An increase in the discount rate raises the cost of borrowing reserve from BNM and decreases banks' reserve, which decreases the lending and decreases the quantity of money. As a result, an increase of interest rate decreases the money supply. Graph above show that, on the other hand, BNM will decrease the discount rate in order to increase the money supply in the market.
Relationship between interest rate with strength of currency. A highest interest rate usually results in a stronger currency, and a lowest interest rate usually results in a depreciation of the currency value. Increased interest rate for a particular country attract foreign investors due to the increased rate of return from investment. For example, interest rate in one country increase, the currency value of that country will increase. Conversely, the lowest interest rate tend to be unattractive for foreign investment and decrease the currency relative value. Next, the relationship between interest rate with inflation. Nominal interest rate is unadjusted for inflation, while real interest rate is adjusted for inflation. Higher interest rate tend to lend to lowest inflation, while lowest interest rate tend to lend to highest inflation. If the economy is growing and inflation is in relative check, the interest rate usually remain unchanged. For example, when consumers across the economy spend more money, the economy grows and inflation occurs.
The next is impact of interest rate adjustment towards Malaysia's economic performance. The interest rate does affect the economy as a whole, the stock and bond market, inflation and recession. When interest rates are rising, both business and consumer will cut back on spending, cause earnings to fall and stock price to drop. When interest rates have fallen significantly, consumer and business will increase spending, causing stock price to rise. A raising of interest rate will slow down the economy's growth, while a dropping of interest rate will stimulate the economic growth.